Good morning from Glasgow. I'm here at the Green Horizon Summit at COP26. My name is Sandy Boss. I'm the Global Head of Investment Stewardship of Blackrock. And I am joined today on a very important panel about the role of private finance in the transition to net zero by two fabulous guests. So first, we have Maria Nazarova-Doyle. Maria is the Head of Pensions and Investments and Responsible Investing for Scottish Widows. I'm also joined, and again virtually, by Jim Snabe. Jim is the chairman of both Siemens and Maersk. He brings unique insights as a corporate leader. And our goal today is really to talk about, the joint effort that corporates and finance will need to play on the transition to net zero. And so what I'd love to do is start a constructive dialogue as we bring an asset owner, an asset manager, and a corporate together. So welcome, Maria and Jim. Let's get started. Maria, I'd love to begin with you. And just as an asset owner, what are your objectives and how does climate risk and opportunity fit in for you?
Thank you, Sandy. So our objective as an asset owner, and specifically as a pension provider, is to help our customers achieve financial security in retirement, while at the same time building a future worth them retiring in. So we can't really separate the two objectives, as there is just no point having a large pension pot that you have to spend on hazmat suits and flood-proofing your home. So given pensions are a long-term field, we focus on the long-term sustainable outcomes for our customers. And our ambition is to offer our customers sustainable investment choices while challenging the companies we invest in to behave more sustainably and responsibly. So ESG and climate change are absolutely vital for us to take account of, both on the risk side and on the return opportunity side. And long gone are the days when we used to argue whether ESG integration adds value. And the question now really is not why should we do it, but how. How best to integrate these factors, how to choose which strategies we need to employ, how to approach stewardship to take the right kind of actions to ensure we move the dial in the real world as much as within our portfolio, and as those things just don't exist in isolation. And just to give you a very quick high-level feel for how we do it, in terms of integrating climate issues into our strategy, we normally use the what we call the 4 risk. And in our stewardship, we focus on the highest emitters and those not making progress quickly enough. In exclusions, we have already divested from companies heavily reliant on thermal coal and tar sands. And what we mean by that is companies who derive more than 10% revenue from those activities. And we're also looking to phase out coal over time. And in terms of allocating capital to climate themes, we invested over £3 billion now into the Climate Transition Fund we developed together with Blackrock. And we also created a fully fossil fuel-free fund with Schroders to address the demands from our pension customers. But probably the most important in terms of integration is into our investment decisions is how we're rooting everything into our net zero strategy of targeting 2050, while halving the carbon footprint of our investments by 2030, with shorter term targets as well, which is very, very important. And we're now working on a detailed climate action plan that will provide transparency of how we're going to achieve our net zero goals, and we'll publish it at the start of next year. So integrating climate change considerations is really the only approach we see viable in continuing to deliver good results for our customers.
Thank you, Maria. And I'd love now, Jim, to bring you in. As a corporate chairman, tell us, how do climate risk and opportunities drive the strategy that you're setting as a company?
Well, thank you, Sandy. Great to be on the panel. Also great to be here with Maria. I think it's a key topic of our times, and obviously great at COP26. I actually believe we're at an inflection point from a corporate point of view, where maybe before we had a tendency to treat this topic as a question of how do I spend the profit I earned to do some good in the world and to show that I care. So it was more of a branding and some decision around how do I take some of my profits that otherwise would go to shareholders to do something good in the world and create a better and more sustainable future. And it was also kind of a tick box exercise. Even investors had, the tick boxes, and you would make sure you tick all the boxes. And I think what is becoming at this inflection point, it is becoming a way of making money. So it's the way you run your company. It's how do you make money by being sustainable, not how do you spend the profits on doing something good. So, and that I think is an inflection point which makes the whole area of sustainability core to the strategy. The strategy conversation, at least in my boardroom, starts with that. And then from that, you derive how can we increase our revenue because we deliver sustainable products to our customers. At Siemens, the portfolio product we have, obviously a very wide and deep portfolio, almost 40% of our products revenues today are allowing customers to become green. So we earn money by delivering such products, and it's the part of the portfolio that's growing the fastest. And you've seen how at Maersk we are leading the decarbonization of shipping, which is not about how much will it cost? Yes, it costs money, but we think it's a competitive advantage to be the leader to drive that. And so in many ways, that inflection point makes it good business to have a sustainable oriented strategy. And therefore, the acceleration will come. And I'm expecting, and you'll see that in COP26 in Glasgow, how companies are now taking charge while politicians, to some extent, are still discussing.
No, it's a fascinating transition to strategy from pretty CSR report. And, Jim, you touched a little bit on the role of corporates and private sector versus governments. Maria, let me come back to you. The goals of COP, often we focus a lot on governments. What would you like to see from corporates, and from finance coming out of this COP?
Well, I probably am a little bit biased given I'm kind of in the thick of it in the finance sector, but I do feel that the finance sector is already single-handedly making more progress than governments. And now that ESG and climate issues are going through rapid integration into financial decision-making, things are moving even faster. So I would probably go as far as to say the governments need to focus on their own public policy agenda during COP, as they have still a lot to do, while the private sector is already doing quite a lot. So if we just use Scottish Widows as an example, as I mentioned already, we have a net zero goal for a whole £170 billion investment portfolio with shorter term targets like investing billions into climate solutions and climate aware strategies by 2025. Our parent company, Lloyds Banking Group's target is of getting to operational net zero by 2030. And we are by far not alone in this. So what is more, there's now that the companies, particularly in the financial sector, have set those targets, both for their operations and for their investments, we're starting to see the first moves towards putting these plans into practice. So showing that this isn't just talk, which is obviously very important, so moving past those glossy brochures and big targets. But of course, having said this, we can't solve the climate crisis through just corporate voluntary action alone without regulation. But the private sector is out there already delivering, so supporting laws and regulations will be a strong wind in the right direction and will help push this change through the whole system. And one area for me, which is probably a bit too specific, but one that's really close to my heart and where we still need help from the government is in defined contribution pensions, which is the type of pensions most of us have in the UK. And this area is all about unlocking private markets so that we can invest capital directly into innovative businesses that are working hard to support the transition. So we have issues of access to private markets due to the structure of these pensions. But the UK government has been trying to help with this for quite some time now, and it's great to see this support, particularly now that it's included into the UK government's net zero strategy. And actually, this makes me think about the specific role asset managers play in allocating capital. And I wonder, Sandy, if it's okay for me to ask you a question?
Absolutely.
Excellent. So what do you see as your role, given that you sit at the nexus between asset owners and corporates?
Maria, it's a great question. So look, as a fiduciary, we are not indifferent to what happens in terms of this climate transition. So, our role is to look after the economic interests of our clients and the companies that we're invested in. And, what that means for us is really thinking about what does a good transition look like? Our capital markets assumptions start from the premise that there's 25 points of economic benefit over a 20-year period from a transition that's managed well versus one that goes badly. And so from that perspective, then we need to think about how do we help our clients navigate this incredibly complicated transition. And let's be clear, this is the most difficult problem the world has probably faced, in at least several lifetimes. So we're trying to minimize global greenhouse gas emissions as rapidly as possible. At the same time, we need to preserve a functioning and reliable global energy supply, and we need to be thoughtful about the impact of the transition on the people who are most vulnerable vulnerable. So whether it's the poor in developed world or much of the emerging markets. And so in that context, then, what can we do as asset managers? One of the things is obviously to provide the right product set. So the right products that can allow asset owners to be able to, make investment decisions that realize those long-term goals that you were talking about, and also express sustainability objectives. So it's everything from index to active management to alternative private markets, as you were describing. It's everything from, broad investment to thematic ESG product, as well as to impact products. So that product set is really important. We're very interested in the data and the analytics. How do you and the corporates come together around information, around your transition pathways, around the carbon intensity of the companies and therefore their portfolios, so that the products that you're invested in, are informing you in terms of, how carbon intensive that portfolio is. And then the final point, which is very important, as the three of us get together on this call, is stewardship. That's the group that I lead at Blackrock. We need to have a constructive, ongoing dialogue with these carbon-intensive companies that we're invested in on our clients' behalf. And that's talking about, what are the company's plans? What will they do in order to get to a global net zero by 2050? It's never asset managers telling companies what to do. It's engaging with the companies and the boards, the chairman like Jim. What are their plans to, put climate at the heart of their strategy, to think through their short-term, medium-term, and long-term targets? So, we really see ourselves as facilitating, that movement of capital into investing in the transition. Look, I've probably spoken enough answering your question. Sorry if that was long-winded. Let's go back to my panelists, right? So Jim, I'd love to come to you and let's make this real, right? So you have spoken at length about Maersk and about the transition that you're on. Shipping is a really challenging sector to abate. So could you bring to life, what are you doing to help make that, a net zero sector and Maersk net zero over time?
Yeah, no, thanks a lot, Sandy. That is certainly one of the key topics on my agenda these days. And we are represented at COP26 as well with our executive, Henriette Thyssen, talking about our commitments. So the first, part of this, I always said that you need three phases to go through, and most companies do. There's the knowing, which is understanding the size of the problem and the dilemma. There is then the choosing, which is the moment you make a commitment, and then the doing. And I'm hoping that this COP26 is about the doing. We went to the knowing back in 2008, actually. We realized that 9% of our global emissions come from transporting goods around the world. Now, to solve that problem, of course, you can stop transporting goods, but that would be bad for world economy. So we needed to solve this in a different way. We've worked hard on trying to reduce emissions by building bigger vessels that are more efficient and also by sailing slower. But there's a limit to how much you can do that way. Actually, that was a good business case, by the way, because we then consume less fuel, and then we have, of course, less costs. So in 2018, we realized that we cannot continue down that path. Then eventually we will sail so slow that we don't sail at all. That helps on CO2, but not on global trade. So we took a different stab at this, and we made the choosing. The management team of Maersk decided to make a commitment to be carbon neutral by 2050. And this is not so easy because there are not that many simple solutions. I mean, a vessel that crosses one of the big oceans, if you put batteries on as an example, the batteries would take up 60% of the capacity of the vessel. So that's not an option. So we needed to find a solution to this, but we made a commitment, we chose. And at the time, we had no idea how to do this. So it takes some courage. And now we're 3 years later, and we know exactly how to do this. The solution is called Power to X, which is basically converting green electricity from solar or wind or other sources to a green hydrogen, and then convert the green hydrogen to a green fuel, which is liquid at normal temperature, which means we can actually build and retrofit existing vessels so that we can reach our carbon neutrality actually much earlier than 2050. The issue we have is that we have 750 vessels that, in the original plan needed to be replaced by zero carbon vessels. And we knew we had to get the first zero carbon vessel sailing by 2030, then it would take 20 years to replace all of the 750 vessels. But now we found Power-to-X to be the right solution, because then we can retrofit existing vessels. And so the only issue left, there are two issues. One is the price of green fuel, and that's high because it's not enough volume. And the other issue is actually the scale. We need a lot of it. I mean, annually, we consume 10 million tons of bunker. And we made a calculation, how much green electricity do we need so that we can replace the bunker oil with green fuel? And we need 220,000 gigawatt hours of green electricity. That is 10% of the installed base of solar and wind in the world today, just for our vessels. So that gives you an understanding of the magnitude of this problem. Now, what that means from an investment point of view is that you basically have a situation where if this industry is going to be carbon neutral, we need to have a dramatic growth in green fuels. So my prediction is that for the next 10 years or more, there is going to be a much, much higher demand for green fuel than supply of green fuel, which from an investor point of view, in my mind, sounds like a great business opportunity. More higher demand than supply normally means bigger business opportunities. So that's how we look at it. And we needed to solve this chicken and egg problem. Nobody is building a green vessel because there's no green fuel, and nobody is producing the green fuel because there's no demand from the green vessel. So we went out this year and ordered the first vessels, 8 large vessels. So right now we're looking for 400,000 tons of green methanol by 2023-24. So I'm telling this story because in my mind, this could be the biggest business opportunity ever to shift the whole world from a black liquid fuel to a green liquid fuel. And the benefit of that solution is, of course, that we can utilize and reutilize many of the assets from the black fossil-based fuel world, the tanks, the pipes, the tank vessels, etc., and only do minor adjustments and then basically have an accelerated path into that future. So when we look at this, we look at it from a great business opportunity. We think there will be much more customers as they commit to scope 3. We are scope 3 for them. So we need to be the ones that deliver that solution. We want to do it way ahead of our competitors, and we need to use our purchasing power of vessels now. We spent $1.4 billion on new vessels that are green to now shift the energy industry to create a market. We're creating a market for green fuels, and I'm hoping that COP26 will help us accelerate the production of green fuels. So that's how we look at it. It's going to be, I believe, the biggest business opportunity for Maersk ever, and we're 117 years old, and it's going to be the biggest opportunity for whoever realizes that green fuel is the future and it's time to invest rapidly. So that's how I see it. But maybe, Maria, I could also then ask you that same question. So how do you look at corporates and what are your expectations? What does good look like for you? I understand the avoidance of risk in those that are doing it wrong, but is there a benefit of being ahead of the game and trying to actually lead the transition towards a decarbonized industry?
Yeah, absolutely. Thank you, Jim, for this question. So I said earlier that there's been a lot of progress in the private sector, but more voluntary action is definitely needed to set the pace and good example for the laggards. And while those who are left behind will be swept up by regulations anyway, we would much rather invest in the winners of the transition to support them, with what they're doing and what they're trying to achieve, and at the same time make sure that we manage the risks that are associated for us with stranded assets. With those companies that haven't got the memo yet, so we're much rather to avoid those. But to support corporate action, it's very important that investors engage with companies in their portfolio and that they use their shareholder rights to stimulate the right kind of behaviors. And we mostly engage with our asset managers, so not directly, but sometimes we do direct engagement as well, where we think we can add value. So, for example, with those companies that are in the highest emitting sectors but aren't yet captured by the efforts of climate action 100 plus. And also have been looking to take more control of our voting decisions. And recent developments from Blackrock actually have really set an example of how asset managers should work together with their clients. And we're now very fortunate to be able to choose a voting policy that fits with our own position, even though we don't have like a segregated arrangement with Blackrock. So I'd like actually to take this opportunity to thank you, Sandy, personally, as this is a groundbreaking development and will really move the market, allowing more asset owners like us to feel closer to voting issues and impacting real economy outcomes through the stewardship that we do. So thank you very much for your hard work on this. In terms of assessment, though, of where portfolio companies are, we also look at transition pathway initiatives work, which we think is brilliant. And with TPI now becoming a global climate transition center, this would help dramatically by increasing their publicly available assessments from 400 to about 10,000 companies, which will make it very, very useful in terms of tools and data that are available to investors. And Climate Action 100 Plus benchmark is a really useful tool as well. We ourselves use the IIGCC's Net Zero Investment Framework, which is a very handy how-to guide for aligning portfolios to net zero. And it goes beyond investment-specific actions to include things like guidance in stewardship and policy action and advocacy. And this is crucially important, as using this framework consistently across a large number of investors leads to more joint-up action, where everyone's efforts are pulling in the same direction. And that's the only way we can solve this, really. And there's so much momentum in investor collaboration right now, and it's just amazing to see everyone working together rather than treating net zero transition as a competitive sport.
No, Maria, I really appreciate that. And look, as I sit and think about, what is our role in this game, I'm very humbled by what I was hearing from Jim around, this tremendous scientific transformation. And I have to say, just in the 24 hours that I've been at COP this year, the number of discussions that we're having with corporates about absolutely phenomenal technological breakthroughs, like how to have a semiconductor-like experience with, millions of times more productivity, taking that experience and bringing that into these real economy industries. And then what can we do as investors to help facilitate that? I'm definitely going to think about, what are the ways that BlackRock and other investors can invest in these new opportunities. And then, of course, at the same time, Maria, to your point, continuing that dialogue, that engagement year in, year out with companies, using the analytics that you described. We're very happy to see the momentum around things like TCFD, the Transition Pathways Initiative. Hopefully we'll be able to have every company being able to report their plans in a consistent way that really lets us as investors get the data that we need to form those forward-leaning products that then bring the finance to, these trillions and trillions of dollars of exciting new opportunities. Well, look, we're coming close to our conclusion. So what I'd like to do is, Jim, come to you and just say your wish list. What would you like to see come out of this COP, big and small? Over to you.
So 3 things. First of all, I would very much like to see companies team up around this. I mean, at Maersk, we realize we can't solve this problem alone. We need the renewable energy companies, we need the distribution of energy companies, we need the chemical companies at the table. Otherwise, we cannot produce enough green fuel. So we can have all the commitments in the world if we can't get the green fuel. So that's the first thing. It's like we really need to come together to accelerate the action, not have individual plans. Number 2, from the investors, and I would love to be in this panel because BlackRock is one of those companies that really have moved the needle on this. Moved from the tick the boxes stewardship to the active investment. Spend the money there so that we can accelerate the path to that future. It's a dramatic, just for our industry, we expect this to be a $2 trillion investment, not for us, but for the entire industry. And that's a lot of money. Well, it's only 4 years of capital expenditure in oil and gas today, so it's not completely out of sync. We just need to make the shift, and you can do that. And I think that would help because then business follows where the money is. And my last, and that's the big plea, the sharpest knife that politicians have is a global price on CO2. If we had a global price on CO2 of $150 per metric ton, the business case is easy. Everyone, every company would go down this path because it makes good business sense.
Thank you, Jim. Three big wishes, and I've heard already quite a bit about carbon taxes, even this short time I've been here in Glasgow. Maria, I'd love to hear your wish list. What would you add to Jim's?
Just for me, for example, the big area is the strengthening of nationally determined contributions. So what we currently have is grossly insufficient. And given the latest IPCC report that keeps me up at night, with its stark findings, we really have no time to waste. And countries do need to up their game and fast. So recent climate action track update is showing that only the Gambia has policies in place that are 1.5 degrees compatible, which is of course well done to Gambia. But where is the action from those that really need to show progress? If just the G20 countries adopted net zero targets for 2050 and 1.5 degrees aligned goals for 2030, global warming would be limited to 1.7 degrees, essentially leaving only 0.2 degrees to the rest of the world to solve. And obviously easier said than done, but that shows where the scale of the problem lies. And I think it's very important to have a net zero transition plan that considers society and communities and is just. And so is the net zero plan that looks to protect ecosystems and biodiversity. So we just can't forget those vital areas in our rush to deliver net zero, and it just can't be at all cost. And frankly, without making the transition just and without protecting and preserving nature, I don't think we can get to net zero anyway. And the last thing I'll probably say on this is, ideally, I would love, in terms of wild wishful thinking, I would love to see an agreement that no country can have a net zero target beyond 2050. But unfortunately, I know that's not likely to happen. So on the smaller scale, I do hope to see TCFD becoming mandatory globally. And I think that one seems more doable. So hopefully we'll get that.
Okay, Jim, Maria, an excellent finale for us. I think hopefully, world leaders are taking notes and have been watching you assiduously. Thank you very much for coming, Jim. It's brilliant to get the perspective from the corporate leading strategy, transforming the real economy. Maria, understanding how you are, pursuing the needs and the long-term goals for your beneficiaries, and also thinking about sustainability every step of the way. Fantastic to see you both remotely. I look forward to seeing you live. Thank you for your time, and thank you everyone for joining us today.